Hello from the Dukascopy TV studio in Geneva. We are talking about the future of the Eurozone and is there a continuation of the Greek tragedy with Mr. Osmond Plummer. He is an independent wealth management consultant and his company is called wealthcoaching.ch. Welcome to the studio, Mr. Plummer.
Thank you very much. Pleasure to be here.
So how do you evaluate the recent outcome of the negotiations of the Eurozone with Greece? Is the tragedy over now?
I think we maybe have finished Act 1, but if we're going to keep the dramatic metaphor, we have an intermission and we will see what transpires in Act 2. What was announced yesterday is the framework for a deal, not the details of a deal. And we had the further complication that the IMF yesterday evening said that they're not convinced that Greece is capable of delivering on what it is signing up for. So we have agreement about a form of agreement, but we don't at this stage have the full details or details of exactly how Greece will implement that deal.
So there have been discussion whether a Grexit would have been the lesser evil. Now the creditor countries, especially Germany, are heavily criticized of making the jacket too straight for Greece. Will Greece be able to carry the burden?
If Greece implements everything, it is a possibility. It is not necessarily a probability. It is a very difficult burden to carry. It is preferable, I believe, to a Grexit. I think that is the case for the Eurozone. I think it's certainly the case for Greece itself. But there's an awful lot of stuff to be implemented. The deal actually has laws that have to be passed today in Greece. It's got to get through the Greek Parliament. It's got to be approved ultimately by other European parliaments. It's not about one democracy called Greece. It's about a group of democracies called the European Union and the Eurozone countries. So there are a lot of hurdles to jump over. However, if you can jump over all those hurdles, if Greece can actually implement everything it is signing up to do, then it is possible that this will, over time, but it will be a very long time, this will resolve itself and the Greek economy can reform and come back into positive territory.
So let's just assume that Greece Parliament, it finds a majority for all the reform proposals from the Eurozone partners, from the creditors, that everything is going as planned. So also the IMF stays in. So still, there is a lot of trust broken in the Eurozone. So what has to be done now to
Greece has to start implementing things. I mean, the directive that came out of the meetings over the weekend starts off saying, in order to build trust. That's in the first paragraph. And it is going to be essential that the Greek government starts concrete implementation strategies to say, okay, this is what we're going to sell off. Part of the deal is a 50 billion sale of state assets. They've got to start putting things on the table and taking action. What has happened before is that the countries have signed up to deals that haven't happened. The Eurozone will be looking very closely to see that Greece actually starts to implement all these things. The VAT increases, all these things will be implemented and are happening, and the taxes are being collected and so forth. And then that will build trust, but it will be by actions on behalf of the Greek government that the trust is built, not by signing documents.
How positive are you in general of a recovery of the Eurozone? There is of course also the massive QA program that is a QE program that is currently happening. So how positive are you?
I'm marginally positive, I would say, there. The QE program is something that was essential. I think it came later than would have been ideal. It would have been better had it come earlier. But it is demonstrating a commitment to liquidity in the markets. One of the problems, though, within the European zone is the way that corporations are financed. It is principally in the European zone. It's through bank lending. Banks have been shrinking their assets. They are less keen to lend. In the United States, for instance, debt is much more investor-owned rather than bank-owned, and investors are looking for yield. So banks are nervous to lend in Europe. In the States, people are looking for yield, and so they will lend more freely directly as investors, and that's part of the different cultures between the US capitalism and European capitalism. However, putting money into the system to allow banks to lend is an essential part of the recovery for the Eurozone.
So we are currently in a time of high uncertainty in markets. Do you see this uncertainty to last longer? And if so, what advice do you give when it comes to investing to the right wealth management strategy right now?
I think probably the best wealth management strategy right now is to be very, very protective and very, very cautious. We have a huge amount of uncertainty. A lot has to happen to justify what I see as relatively elevated market prices. You see certain companies trading in the States, in Europe and so forth at very high multiples that aren't justified by the current situation. Things have to get better, and markets are made of individuals who are betting on things going well and individuals who are betting on things going not so well. I would be very cautious at this stage. I think valuations are high. I would advise people to be very defensive in their asset allocation.
Thank you very much, Mr. Osmond Plummer, for being here today.
A pleasure. Thank you.
And thanks for watching. Do make sure to keep clicking back on the Dukascopy TV website for latest updates and other exclusive interviews. Have a great day and see you next time.